Silicon Motion Technology Corporation, together with its subs, designs, develops, and markets NAND flash controllers for solid state storage devices and related devices in Taiwan, US, Korea, China, Malaysia, Singapore, and internationally. Okay. So these are solid state drives, and all you gamers out there, a solid state drive is faster. That's what the gamers use. Well, in high end computing, you also want solid state. So you have the read access to be that much faster. So those are premium hard drives. This is a $2.85 billion market cap company, revenue 768 million. All right. So you're not paying too much. The PE ratio is a little high, and this is a hardware company. So I'm going to take a look at their margins, because hardware companies tend to have lower margins. So we got to make sure we're getting a really good price, and we feel like this company is growing. Year to date, this stock is up 55%, 1 year up 47, 5 year 138. So it's had its runs, and it's had one here recently, along with a lot of stocks in 2025, but it hasn't had a long-term upward trajectory on their stock. A lot of the gains came out of, I guess, 2020. It came back down. So let's take a look at their financials. So when did they announce last? These guys announced they will be announcing on October 29th. So I imagine they announced in July, late July was their last earnings announcement for covering the quarter that ended June 30th. So the revenue isn't looking too hot. Let's take a look at the quarterly, see what's going on. Yeah, we've had 1, 2, 3 quarters of negative growth on the top line revenue. And revenue tells us, is this company's products, are they succeeding in the marketplace to get more customers to buy their solid state drives? And the answer is, for the last 3 quarters, fewer customers bought their product. They are losing ground to their competition. They were on fire for a little while here. Look at that. Beautiful growth. But it looks like it was cyclical. It turned on, then turned off. And it's not the first time that's happened. In 2019, it happened. So these are the types of businesses where once they have all the hard drives they need, they don't need any more. These hard drives last a long time. So we don't have any growth. That's a problem. Okay. Because based on a PE ratio of 36, you're supposed to be growing. You don't have a 36 and you're not growing. That's a problem. I could buy Google at a 26, 27 PE. That's growing at 13%. They're massive. I could go on a long list of stocks that have a better PE. They're growing. So that's an initial first red flag. Not growing, high PE, we got a problem. Cost of revenue is a little high, so the gross profit isn't going to be great. So these guys, very little cash flow, 30 million in the trailing 12 months. That's anemic, very low. Gross margins of 46. That's not bad for a hardware company, but it's not great. We saw a software company in Synopsys, like 80% gross margins, and overall profit margins like 20%. These guys are at 46 and then 10%. So not very profitable. It's a good business, but it's not very profitable. So these guys are probably not going to be, when I value them based on cash flow, we're not going to get anywhere near their stock price. Let's see 2 more things. The forecast, what are analysts saying about the stock? Are they thinking it's going to grow? So we are in this year here, very slow growth. It's actually been worse than that. It's supposed to grow some next year, and then it's going to slow down again in 2027. The profitability is going to expand, and eventually it'll get that PE down. But right now, they're kind of underperforming. They're under executing, right? They're not growing their business. It's the market is buying other products and going to their competition. Yet the stock is really moving. Interesting. It's interesting that year to date, we're up 55. Even the 1 month is up 10%. But the performance is going in the opposite direction. They're losing revenue. So that's interesting. And a little bit of contrary to what I would have thought. If the stock price is going up, I would expect revenues doing really well. So it looks like they just have cash and no debt. That's very good. So on this one here, I'm certain I'm not going to get to the stock price on cash flow. $30 million just doesn't get me much. Could I substantiate it based on earnings per share? I think analysts could. They probably make a case for it. And it looks like they are saying that it's fairly priced at their current stock price. There is an analyst that's saying that the stock should be priced at 65. The best case is at 95. All right. So this one here is going to be a hard pass for me because 30 million, you know, the best I could do is maybe get to like half a billion to 600, you know, million dollars. And we're not even close.